everybody, Mike Molina here with some exciting news about Fannie Mae and Freddie Mac having changed some of their guidelines to allow you to qualify more buyers or qualify your current buyers for more homes. So let's get into it, shall we? So first up we have these two big changes. Number one by Fannie Mae, which they are now allowing only 5% down for owner-occupied properties that are 2 to 4 units. This is a huge game changer, and I'm going to go over why in just a minute. The other big change we want to discuss today is FHA now allowing for rental income from properties, single-family homes that have accessory dwelling units, ADUs. So let's talk about the Fannie Mae announcement first, because this is huge. So Fannie Mae is now allowing for a buyer to put down just 5% for owner-occupied 2 to 4 unit properties. Now you might say, well, what's the big deal here? We've been able to do that for a while with Freddie Mac, right, or other conventional loans. Well, yeah, Freddie Mac did allow it, but it was only on their Home Possible program, which is a special program that has income limits. The borrower cannot make more than 80% of the area median income, and so he does not qualify for the Home Possible program, which means he can't put down just 5% on the 2 to 4 unit property. Not only that, the rental income from the other 2 to 4 units, counted as part of the borrower's income, which means more times than not, the additional rental income that we were using to qualify the borrower for the multi-unit property ended up pushing them above the income limits. This is why you haven't seen this loan done a lot. It just doesn't generally work out. The only other options being FHA, and that has its issues too with multi-unit properties. But with Fannie Mae, it's just pay 5% down, no income limits, no special programs, just whatever it is. So this is a huge game changer that will allow you to get your borrowers that may be wanting to buy multi-unit properties as long as they're owner-occupied with only 5% down. And remember, those loan limits were just increased for 2024, and with every unit more a property has, the loan limit goes up. So please keep that in mind. All right. So let's talk about the FHA change with ADUs. So this, I can't stress enough how big this is, because FHA has never allowed us to use rental incomes from single-family homes that have ADUs. And as you know, FHA has higher debt-to-income ratio ceilings. It also has lower rates. The mortgage insurance is recently changed, bringing it down to only 0.55 from 0.85. That may not sound like a lot to you, but that can literally translate into hundreds of dollars depending on the loan amount. So this is actually a huge game changer. So all those single-family homes out there with ADUs now qualify. You can use the rental income to qualify people with the FHA program. Now, the total income from the total rental income from the ADU cannot exceed 30% of the overall qualifying income. That is usually not a problem on these types of loans, but just to point it out, it does need to be a legal ADU. What this usually translates into in terms of qualifying, depending on where rates are right now and the taxes and things like that, but generally this is going to mean another $15,000 to $20,000 bump in purchase price power. Sometimes it can be more, sometimes it can be a little bit less, but that's just a rough range. But even more importantly, it will allow for an additional $400 to $500 a month in consumer debt. So those borrowers that maybe were qualifying just fine on the house but had a lot of debt, this could potentially help them qualify for more. So that is a quick rundown of the overall program changes. I hope you can see the value in this. It is huge. If you have questions, please don't hesitate to call me anytime. I'm more than happy to go over it with you. I hope you have a wonderful day and look forward to talking with you soon. Take care.